traders at UBA said the Treasury bills market has been fairly active this week, with demands for mid and long-dated bills driving bullish sentiments. Meanwhile, the Central Bank of Nigeria is expected to release the outcome of last week's retail SMIS auction. Chuka Nwachukwu, head of ALM and balance sheet management at UBA, joins me now for more market updates. Chuka, thank you for taking the time out to join us today. Let's get right to it. So let's start with the money market. Talk to us about the situation at that segment.
Thank you, Esther. Money market has been pretty liquid. We've seen rates hover between 11.5 and then 13%. This is a far cry from what it used to be few weeks ago, where we saw rate between 17% to 19%, and so that has actually driven activity in the on the fixed income desk, as well as fixed income desk, and then as well as fixed income debt, and then as well as the treasury bill desk, sorry, and then as well as the bond desk.
All right. Well, I wanted to get into the nitty-gritty of it, especially secondary market trading at the bonds market. What were the specific trends that you saw in terms of, what investors were most interested in?
I think generally what has happened is that because the system is highly liquid, we've seen a reaction, especially on the on the middle size of the curve, the 2028 and then 2029. This is because a lot of investors, see this bond as more attractive in terms of yield compared to going into 1 year treasury bills, which is trading around 6.5%. And so the bond itself, unit itself, has actually the yields had actually reduced. We've seen a drop in yield for about 1 to 200 basis point drop due to the liquidity in the system.
Now, I know that the Q2 bond calendar is out, and I believe we had 2 new reopenings. But I wanted to ask you about what investors are thinking in terms of the borrowing of this new administration going forward, especially domestic borrowing. Now, we know that obviously that bill for the fuel subsidy is off the balance sheet as is where at this moment. So obviously that frees up more cash. But then, the previous government was borrowing anyways to fund the fuel subsidy. So, but what is the forecast or expectations in terms of the gravity or the level of borrowing going forward from this administration?
I don't see the borrowing reduce. Reason being that nothing has really changed. Though the fuel subsidy, as announced by the president, will not be in existence after June. But again, if you look at government revenue, you find out that most of the borrowing is from the domestic market. So we still see this borrowing, continue, and then of course we see also that will also make the yield, continue to be attractive in terms of borrowing from the investors. Okay,
so for the 1 year paper, treasury paper, for instance, where is that now, and what is your forecast in terms of trading range in the next couple of weeks?
Okay, the 1 year paper last came out at 7.99. It's currently trading around 6.5%. So this will continue as long as the market is liquid. Another thing I failed to mention is that most of the investment, especially from the bank, is just geared towards reducing the cash as against a CRR debit. So it's best you invest in any security you see above 0% in order to be debited at 0% in CRR. So a lot of investors, especially on the bank side, you see actively involved in a short to medium table bonds, and then a 1 year bond is just to to reduce the liquidity they have, and then as well as run away from a CRR debit.
All right, I'm afraid that's all we have time for today. Thank you so much, Chuka, for talking to us, and of course, have a great weekend ahead. That was Chuka Nwachukwu, head of ALM and balance sheet management at UBA.